and co-head of software equity research at Citi. Thanks for being with us. How much of the computer outage story surrounding CrowdStrike is being reflected in both the numbers and the outlook from the company?
Thanks for having me. I appreciate it. Look, I think the drawdown in the stock today is largely a function of the bills coming due from the outage last summer. Look, this company has done a tremendous job in extracting and monetizing the loyalty and the goodwill it has engendered with, it's close to 30,000 customers. But the reality is the outage was huge, as you pointed out, and customers needed to be made whole on that front. And CrowdStrike was aggressive and assertive on that front. And so we're essentially seeing financial impacts that are coming to roost in probably a little bit more of a dramatic fashion than certainly we were expecting, and certainly from a free cash flow perspective, which is sort of what's being manifested in the stock and sort of the dislocation today.
I'm so glad you talked about free cash flow, and hopefully we can nerd out here for a second, because if you had not seen this massive outage, which really, to your point, has redirected the conversation for almost a year at this point, here's a company which not just generates, impressive free cash flow. Their free cash flow margins have been impressive. The idea of translating every dollar of revenue into capital that can be used for a lot of stuff. And it looks like the free cash flow, while some might have wanted it to be better, was still above estimates. And the predictions are that the company's free cash flow is going to keep growing over the next few years. And I only bring this all up because this is kind of one of those interesting moments. Pain for shareholders today, uncertainty in the air in 2025, and yet a company that had so much momentum and could get back on that horse. Do you think CrowdStrike, based on everything they're doing, can be a recovery story over the long term?
Look, there's, on the one hand, this management team has expressed redoubled confidence in their ability to kind of get back their mojo, if you will, to the pre-outage levels. But patience is required. Right. As I mentioned, our forecasts in the very near term are probably taking a little bit more of a pit stop than we would have liked. But the ramp is back on schedule in the back half of this year. And I really think the conversations that we're having with institutional asset managers and investors is just around negotiating what the quantum of that recovery is going to look like, right? And just to put some numbers around it, I think CrowdStrike is a victim of its own success in terms of being held to an extremely high bar. So, generating mid-30s free cash flow margin in the context of enterprise software just puts them, and historically has put them, in rarefied air in terms of metrics, just elite levels of capital efficiency and go-to-market efficiency in this business. And now we're looking at calendar 25, where we're kind of looking at mid-20s, right? And that is a far cry from what the company has expressed as in their long-term operating model of 34 to 38%. So it's quite a way to get back up there. Yeah. We certainly have confidence they can get there. But it's just sort of the time frame and the patience, and all of this in the context of, hey, this is still a premium multiple stock. And so the margin of error is thin.
We only have about a minute left, but I did, you cover this company, you cover Palo Alto Networks, all these different cybersecurity plays. Bloomberg had some really fascinating numbers on just how big the cybersecurity market could look over the next decade, in part because of the AI boom, especially if people are rolling out all these new AI tools. Are they willing to do it without any, checks on things going wrong? So for those who are curious about investing in cybersecurity over the long term, how big of an opportunity do you see?
Look, I think inquiring minds are asking the right questions, right? We think the secular trends in this space are extremely attractive. AI just pours gasoline on that fire, right? And it's both from a preventative and defense mechanism standpoint, but also being mindful of that the attacker and the adversary landscape is also going to be deploying and employing AI techniques to enhance and accelerate their tradecraft, right? So all of that to say is, We can, a lot of the cybersecurity names are going to be infusing AI into their portfolio. Large organizations are going to have to figure out how to protect themselves from the blind spots of AI, but even the bad actors are going to be using a lot of these capabilities to get even worse, even more sophisticated, right?
Yeah.
So those are kind of the big picture themes, I think, that are attractive right now, but we're still kind of in the nascent period of this technological innovation, which is why we've been pretty selective on the names we've liked that are tethered to this theme. And Crowdstrike is one of them, which is part of the reason why we're actually still buy rated on the name, despite the tactically negative stance.
Exceptional insight. Really appreciate it, Fatima, joining us. Fatima Boolani, Director and Co-Head of Software Equity Research at Citi. So some good food for thought there.